Good afternoon, everybody. My name is Juvenal Gomez, and I'm here to give you guys a deep dive analysis into the U.S. oil chart. So, we're looking to the CFDs on WTI crude oil. We're going to start looking into the monthly chart as it'll be easier for us to do our deep dive analysis and to look at the overall picture of the oil chart. So, I want you guys to pull up your RSI and also your stochastic RSI. Okay. So, first things first, let's look at the RSI first, right? So let's take away the stochastic and let's enlarge the RSI. So based on this chart, every time we pass the 70 or we're at the 70, it usually marks some sort of major top or a major correction or reversal. So you can see here early in the 90s when we pierced it right here, you had a major correction over here. And then also over here, when you had in the 2000s, when we peaked, we touched right here, pierced the 70 just a little bit, kissed it. We did went a little bit higher, but we ended up falling. So it tells you where you're at, near, or we're at that top of the chart. That signals some sort of major reversal or close to a reversal or top. So here we pierced it again, and here was in the 2008, and that was during recession where we came down here, massive collapse in oil. Again, here in the RSI, we were past or we're at the 70. It came down, corrected, we consolidated, and eventually you did have a bigger fall. Again, here in the 2018, we kissed the 70 area of the RSI, and you eventually had a big fall as well. And the most recent in 2022, here you pierced the 70, major correction, and then into very close today's date in the year 2026 with the war in Iran, we kissed the 70 and we're already rolling over in our RSI. So that tells you that we're at, close, or we have a top, right? Or we're going to be close to some sort of correction in the oil chart, right? So that's what the RSI is telling us historically. So now I want you guys to pull up your stochastic RSI, and then some things that have in common is every time you have you're going to start to have the the major correction ones, you see your stochastic RSI have crosses down. So here when you had your blue line cross down to the orange and the orange was on top, it tells you momentum, you're losing momentum. And then once you close below the 80 area of your stochastic RSI, then that's when trouble really began, and you can see it more clearly when we take away our RSI here and just stochastic in the price action. You can see once we close below that 70 area, then you had that major fall into the chart, and then same thing here, right over here. You had a cross down here, but the major crosses were over here. See this major on the recession right here, you started crossing, you lost the 70 or the 80, I mean. Once you lost the 80, then you really had momentum coming down here. So, and then every time you see here, you get a cross down. Here you didn't have a major crack like a crash or something like that, or a bear market an oil chart, but you did have a correction here. As small as it seems, but remember we're looking into the monthly chart. This was still a 22-23% correction in oil. So, and then you came back up here at the near the 100 area, and then you cross back below, and then here you had another correction. So the stochastic RSI and the RSI, when you pair them together on the oil chart, they tell you where you're going to have a top, a stall, or a major correction. So that's very interesting. So now as we're going to look into just the technicals now, this time just using TA, if we connect major tops, it's very simple. Just keep it very simple, and you could do just fine in technical analysis. So here, if you connect the July 1st of 2008, right before the recession, and then if you connect over here, March 1st of 2022, you get this major trend line here, and I have it in red and I have it thick, so that way you know it's a major trend line. So we're gonna do that as major resistance. Okay, so that's major resistance because you know that based on these two hit points, every time you hit this red line, you have a massive collapse. Massive collapse. Did we hit it? Yes or no? No, we kissed it. So there's a there's a there's a big difference when you touch it and you kiss it. A kiss it means that you just were barely close, but it means that it could possibly, based on probability and history and studying other charts, you could retrace and revisit it again at some point. But you're like, okay, moving on. But then the RSI and the stochastic RSI, then aren't they warning us? Then they said that this is the top. No. So you can see here, it tells you that you're close or you're at a top. It doesn't necessarily nail to the pinpoint to the penny where the top is. It tells you you're near. Because here you could see we were climbing and we got here to the RSI. It appears to 70, but look what happened. We did touch the red line here. You came back down and then you went back up. So there's, and then you can see in the recently, we did kiss it. We came back down over here. You had this doji candle here. So eventually price came down to $78.87. And then it came back to test the highs over here at $120, but it still never touched the red line of their major resistance high. So it tells you, and then plus recently we're having a little bit of buying stepping here. See this tail on the candle? So there is a little bit of evidence suggesting that we could possibly revisit to touch the red line here. So at current price or we're close to it, still be around $121, $122 that oil could revisit those prices. It's a possibility, but we were going to have to look at the lower time frames and see if there's any patterns that could support that thesis. But for now, we're looking at the bigger picture of things. So here's a major resistance line. So let's hide our RSI, and then we're going to look for other levels of resistance or support. So another level that I like is right over here. Why this area right here? You can see how price action reacts to it. And when you're looking at levels, you're trying to find where there's multiple touch points, right? At least three. Once you have a minimum of three touch points, then you know you have a good level of resistance. And it's okay if it pierces because they could show you more detail as to maybe you can have fake outs or stuff like that. So here there's a case of fake out here. You closed above, but you never had a candle close above it to confirm it. So this was a fake out. Then you came back below, and then when it came back over here, you can see how it got rejected. Came back over here, it pierced it, got rejected, and then here it got rejected once again. And then after a long time, it revisits this trend line over here. You can see it pierced it, major pierce. It hit the red line. So this is the start. Connecting these 2 points was the start of the red line. That's what formed the red line here. But you can see we pierced this major resistance level over here. So we pierced it, and then we came up here, we pierced it again, but we did close above it. But again, you need confirmation. You need another candle close above to confirm the move that it'll go much higher. But it didn't. Here it closed above, never confirmed, and it came back down. And then here we have pierces. But the evidence is saying that this is a good area of resistance slash support. So if it ever closes above and confirms, it would become technical support. But right now, based on the history and the chart, it's telling us that this level of $107.65 is technical resistance. So, and then we're going to find another level here. And I like this pivot here. Why? Again, look at the price action. See, if you go back here, look how it comes up here, gets rejected, closes above, confirms its technical support. But here, when you had the major crash in the recession, when you have panic and moments of euphoria, when you have those two extremes, extreme fear and extreme greed, technicals will just you could just throw those technicals out the window because people will absolutely ignore them. Just to say, I'm not saying that you should completely ignore the technicals, even in those times of panic and euphoria. Those two extremes, you still use them because you just never know when the you're gonna have that reversal or bounce. But you have to keep that in mind when you're in those two extremes where technicals they won't be respected. You take that into the back of your mind into consideration and say, okay, how am I going to navigate it, knowing that they're going to blow through my levels either in euphoria trying to resist to short the stock or commodity, or in where periods of panic trying to buy the lows on the fear. See, so you have to keep that in the back of your mind when you're trading. Okay, so I love this price action again. So then here you pierce it, you confirm, you try to hold it as support, and you did. You got the bounce. Here you came back down. Here you bounced, and then here you broke down. You confirmed, revisit it, and then you get resistance here. See, so I love the price action. So I love that $76.88 level. So that's going to be another area of support slash resistance. Okay, so good area right here. And if you look into the lower time frames, or actually here in the weekly, the monthly, you can see it right here. Here's a gap right here. So this is a technical gap right here. So that's another area, nice area to buy. And then again, look at the price action. You come down here, you bounce, come down here, you bounce, come down here, you bounce, and then you broke it, you found a resistance, and then you eventually broke out. And then here you can see how there's resistance here, resistance here. So this is another area. So if oil ever gets down here, this would be a nice gap technical fill, and that would be a nice area for a long trade right there. Even just a short, like a day trade or a swing trade. And for long term, I don't know. That is gonna depend on multiple factors as well. What are the macro conditions? Multiple factors. But at the short term things, if it ever does get here, that's a good swing trade opportunity to go long on oil or to buy oil. But people won't buy it because at that time, if it ever gets down there, and we pull up our RSI and our stochastic RSI, chances are that the RSI is going to be down here at the 30s, and you're going to have no momentum. Meaning that even if we get down here, you might not get a massive bounce, but you will get some sort of bounce, and people just won't buy it because of the fear. People won't buy because of fear. So now that we got our support and technical resistance areas and where to look for, now I want to look into the shorter time frames, right? So I'm going to look into the daily, and you can see here, there's past history in my chart here that I did trade this. I managed to short up here and took profits over here. And then I'll show you how I came up with that as well. So, but in the shorter time frame of things, before I get to any of that, let's look and read the chart. So the chart, we have a massive topping tail. So usually you get these at the top of rallies or at the top of a market. So are we at the top of the chart? So relatively speaking, if we zoom out, you could say yes, we're at a high, right? We're at a high. We're not as high as these levels over here, but relatively to this trend line, yeah, we're at a high. So usually when you get topping tails like this, they're bearish reversal signals that mark highs, or you're at close to a high. So this line over here, the very top of this, let's see, the high says $119.48. That is your technical quote unquote top for now. So any close above it would negate this topping tail on the daily, but I would like to see confirmation. But what's very interesting is that as this line is declining right here, as time goes on, this line is declining. So you could see that there's this multiple factor here of technical resistance where you have this topping tail factor in the daily, and then you have this our major resistance line here that goes back from the monthly, right? And then here, the way I came up with this short as well was if you make a parallel from connecting this low from March 10th, and you connect this low from March 23rd, and you connect it to this high over here on March 16th, the way you had a definitive pivot here, 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 that's why I choose the parallel tool for me to draw and use that as a guide. And you can see here I shorted here simply because I'm following the technicals of that this is a rising parallel. And usually rising parallels, they usually end up breaking to the downside, and then you have retraces. As you can see here, I shorted here to resistance. Plus, it was close to the topping tail of here, so we were testing this top area resistance, shorted, then we cover down here because simply we're now at support. So this is technical support. So now you're simple as that. You're buying back at technical support. So I covered here. Yes, it went lower, but again, I was looking at the stochastic RSI and the RSI, and the RSI was right at the middle, and knowing it could go a little bit lower, and our stochastic RSI was now lower. But since we're at times of high volatility, you can get really big bounces, and once they go to technical support. So here from this low, I didn't capture the absolute low, but I captured somewhere around here in the body. But let's say you can see here how it bounced another 10% up to the middle part of the parallel and then got rejected. So you can see you can have big bounces on times of high volatility. So that's why I took it here. And I'm just trying to capture the meat and potatoes of the move. So here you broke down, and then you confirmed here on this candle. It's very subtle, but you can see you did close below it. So there's your confirmation. You retraced here and you got rejected here. So there's that. So for me, This is why I'm showing you this parallel because it's good TA for you guys to know. But removing that, do I see a pattern? I see a couple things, okay? And then this is where your experience comes in trading. So at first I was seeing that there was this head and shoulders pattern at first, right? So if you don't see it, here's your shoulder, head, and shoulder that we were possibly forming. Now I don't like that thesis anymore because first of all, the pattern never came down here to the neckline and it never closed below to trigger. So it was an incomplete pattern, so you can't call it a complete head and shoulders. But I was monitoring it for it. So for me, the head and shoulders, or anyone who's saying that this is a head and shoulders, I'm disregarding that. Okay, why? Because the pattern never formed and it never triggered. And plus, on a proper head and shoulders, you want to see a head and shoulders that the neckline is flat, or you want to see a slightly um, inclined head and shoulders like this, where it's up sloping 45. And when you get it down sloping, so here's your neckline over here, where you get it down sloping, then it's not valid. Okay, so that's good technical analysis for you to know as for proper head and shoulders. So this was never really a proper, but if you looked at the other time frames like the 3 day, this was a tail right here. So you can this is where experience comes into play where you say, okay, do I pay attention to the lower time frame or the higher time frame? And I would say the higher time frame because the higher time frame has less false signals. So, but if you go to the higher time frames, you don't really see it as clearly anymore, right? So, and if you go to the higher time frames, now it looks like an up move with sideways consolidation. So now it actually looks bullish if you look into the higher time frames. But then there's also a problem when you're looking to the higher time frames. See how it is technical sideways consolidation, but the problem of this is it's not the price action is not steady. It's not like an up move and then steady. It's okay to have moves like that, but you don't want something like this and then you got a whole bunch of gibberish going on like this. It's not really a clean bull flag either. So to me, I don't see the bull flag as well. So we have that, but I do see that there is possibly a bull flag here. So here's a possible bull flag here, up move, sideways consolidation right here, and we're having them move up now. So that's a possibility, and we're holding support right here if you connect this trend line here, this low of April 17th, and you connect this low right here on May 6th. You can see how you're holding support here. So that's technical support in the short term of things. So I'm going to put that as yellow, or let's do blue this time because we have multiple lines here. And then if you connect these highs over here, you have also right here from April 7th and then this April 30th high right here. Now you can see we're forming some sort of wedge pattern here. So there's a short-term bull flag that's playing out and you can see a wedge pattern here. So that's very interesting to take note of. So you see a short-term bullish pattern here and then you can see how there's wicks down, tails right here. They're showing buying pressure and then the wedge here is showing us that there is probably going to be some sort of an explosive move and it has to make up its mind by the end of or by the start of June. So June 2nd, this either has to decide to break up or below. So but wedge patterns have huge moves. I think another thing too, make a case maybe for a cup and handle pattern. So here's your cup and then you can have sideways consolidation. But what I don't like about this is that usually a higher probability for a cup and handle to play out is you see them at the lows of the chart and we're at the highs. So that's a problem with it. But this is telling me that if this wedge breaks out, you can have a retest probably to the topping tail or to our major resistance line in a long time frame. So, but remember, you want to see close above with confirmation, but I'm going to be neutral on this chart. But looking at other factors like the 10-year and also other markets, it is suggesting that we have a slight probability that wants to go higher in the short term. But the bigger picture in the monthly and the 2 months say that we want to go lower. So that's my deep dive analysis. I'm running out of time here. I only got a couple seconds left of the video, but I'm going to keep a close eye on this. Remember, you want to breakout confirmation on either side to really know where this is going. Okay, so keep this on your radar and pay attention. So thank you.